Hello everyone, I just wanted to go over extended delta within this video for you all. I get a lot of questions on it, so I wanted to quickly cover it for you here, as well as a bit about this template here as well in a second. So extended delta, so everyone's kind of already familiar with the concept of delta, especially, and I'll cover as well why I thought this would be a great topic to discuss as well in a minute. But everyone's already familiar with delta, the concept of delta, total buys but minus total sells, you get delta, the difference between the two. But to really simplify what extended delta is, and this is like really the concept of trapping traders and understanding that in a bit more depth in terms of the order flow, is by describing delta as like a tug of war, because the candle doesn't just instantly print and you've got a final delta figure. Just looking at, for example, this screen here, you can see we've got delta, delta max, delta minimum. This delta, the delta that's just called delta is final delta, i.e. delta by bar close. What has the delta closed on at the end of the candle? You then have delta max and delta minimum, which in this case is what is the highest point that the delta reached within that case of tug of war, and the delta minimum, which is what is the lowest case that delta reached within that tug of war. It's giving you the kind of the interweeds of what's going on within the candle before it's finished closing. Okay, and then it's kind of going, okay, so what's going on, what's the highest point before it's closed, what's the lowest point before it's closed, and then what's it actually closed at, right? So for example, and that's the simplest way to put it, you have a level of interest, for example, in this case it's this is what it's closed at, this is the highest point, so there's not really many trap traders there. If anything, there's a discrepancy of 100k, which is next to nothing from my testing at least. And then you've got, okay, in this one, I'm just going through discrepancy, there's again 100k discrepancy, nothing really there in detail. And again, this is important to be looking at this at your levels of interest, not just at random regions of the chart, okay? Because I'm picking, for example, for me, I've got a really in-depth system, which I'll go over in a bit more detail in another video, where it's going, okay, what is my level of interest, and then what's going on at that level of interest. And for example, here in this next candle, you can see, okay, level of interest, for example, and then you have the delta itself, and then you've got the delta max. So now there's a discrepancy here where you've got delta, so the highest point in the delta reach was 13.5 million. The candle closed at 8.6 million. And then also in that case as well, right, you can then take into account where's the candle in itself closed, okay, and it's closed all the way back down here, and you've left all this delta behind. So in my kind of discretionary process, I go, okay, has price closed away from where that discrepancy of delta has been? Now let's dive into that even a bit more detail, right? Well, delta in itself, delta discrepancy is, in this case, we're looking at the positive delta of that candle. I want to now know which group of traders have made up the bulk of that, positive delta. I've set that to my T sizes. Again, this is just diving really deep into the interweeds of it all, but be fair to just cut off for now if you don't want to know what it is. In terms of just, we're discussing delta discrepancies, that's already covered. But within that delta discrepancy, we can then go, okay, well, there's a 5 million discrepancy here, right? And then you can then go, well, look, there's 6 million positive delta, in itself is really coming from the largest group of traders in my T size group. And not only that, but the majority of people that are long, the positive delta is coming from opening contracts. So that's new positions coming in. So within this candle itself, we've just decided, so there's nothing really obscure within these candles here, but within this candle here, we've closed away from that discrepancy of delta, and then we've recognized that discrepancy of positive delta is people opening new positions, and in particular larger traders opening the majority of the positions. So in this candle as well, you've trapped a lot of new positions who are from larger traders, right? Alongside that, you then got your typical spike in volume, liquidations as well. But I'll go over that another day. But more importantly, in this case, I really wanted to dive into just, delta in itself, delta max, delta minimum. And in this case, again, we'll just go down quickly. I'll show you another example of this because it's something I'm very, very familiar with. Even the other day on Sunday, I took a trade based on this. It was down here. And you can see the delta discrepancy. In this case, you have a spike in volume on a Sunday, 33.9 million volume comes in. Delta, in this case, we're looking at the lows, so you've got delta minus 2 million, essentially, delta minimum minus 10.1 million, so that's a discrepancy of 8 million really, 8 million. Where's the negative delta coming from? Well, it's the two largest groups, okay, and we've closed away from that delta at a key level of interest. That is, where you want to be entering. And again, there's a lot more into the weeds in terms of how I'm entering, at what exact moments I'm entering in this case, but I just want to talk about the extended delta in that case. So hopefully you found that useful, and yeah, thank you everyone for listening.